Ladies and gentlemen, welcome back to the channel. It is that time of the day to get into an intraday update with AMC Stock. And as I sit here and go through some of the 13F filings that have been coming out over the last couple of days, I noticed one in particular from Citi. Citi has a 38 million share put position on AMC Stock, and I think they could be a bigger player in this than a lot of people do realize, because after all, that is almost 10% of shares outstanding. I believe like 7% of all shares outstanding are theoretically controlled by just this one put position by Citibank. So let's get into that. We're also going to talk about what is happening here on the day in the markets. Markets are getting slapped around just a little bit after what looks to be inflation expectations are becoming unanchored and becoming entrenched in people's psychology. So this could be a bad thing for quite some time to come. So let's get into all of this information. If this is your first time to the channel and you like to stay up to date with everything going on in the markets, as well as talk about a few stocks that may make you some money, consider subscribing to the channel, and number one, hitting that like button. So first things first, let's get into it with what is happening here on the day. I usually like to start with that because I like to feed information down your guys' throats. If nobody else is going to tell you on a daily basis what's going on in real time, I like to be that guy. Now, the Fed governor, Philip Jefferson, nominated as new vice chair to succeed Lael Brainerd. And the markets actually popped off of that at first, which is interesting because he's not necessarily the most dovish, not necessarily a super hawk either. He's kind of right in the middle. I guess that's where they want to keep things, is kind of right in the middle. Now, this is the biggest piece of news that is coming out here today, on top of this survey, in which we'll talk about with inflation expectations and all of that. It is this: the U.S. can avoid default in July if Treasury can make it through June cash crunch. Congressional Budget Office says the U.S. can avoid a default through July if the Treasury Department can pull in enough revenue in June, the Congressional Budget Office said. Still, the government remains at significant risk of defaulting during the first half of June if Congress doesn't address the debt ceiling, the agency said. The new report came as the White House and congressional leaders postponed a Friday meeting to continue negotiations. Now, JP Morgan, as well as other firms and analysts and investors alike, have come out to say this one thing that really strikes me and resonates with me, and I think it's kind of the only way to look at this. Nothing will get done with the debt ceiling until there is a reason to do so, meaning unless the bond market starts to freak out, unless the stock market starts to freak out, unless you start to see initial jobless claims coming in higher and higher every single week, like going from 200,000 to like 700,000, something that's a noticeable change. They're not going to push the pedal to act on this. This is going to be, as you guys have probably heard, an 11th hour, 59-minute deal. Just long story short, it's going to be a last minute kind of thing that they get done, because nobody's going to default on the debt. At least that doesn't make a whole lot of sense to default on the debt. It's not really good for either political party. Definitely a little bit worse for Democrats. So eventually they will concede to these budget cuts, and you will likely get the deficit or debt ceiling being risen. Now, during the infamous episode of 2011, when the markets fell about 21%, traders had given an actual default a 1.3% probability of happening. Only a 1.3%. Well, today, it sits at about a 3% chance of America defaulting, and that is calculated through the credit default swaps of U.S. Treasuries, and they are starting to spike, and some people will point out they're starting to spike like a third world nation. And that is because the probability of a default really has never been this high. And that comes down to divided Congress and all of that. Let me just tell you right now, if we did default, you can expect mortgage rates 10+% within the course of just a couple of days. You could expect companies to automatically cease hiring. You really wouldn't have any more hiring happening in America. By and large, the dollar would likely lose a lot of value, and you would likely start to actually see deflation, which is worse than inflation. Or you could get hyperinflation, but really, who's going to want the dollar at that point? The dollar is only so strong because people want the dollar. The world wants the dollar. So in theory, I guess you could get hyperinflation, but deflation would make a little bit more sense to me, as people would likely sell off the dollar. The dollar would get a lot stronger compared to other currencies, and that could be a very bad situation. On the other hand, again, you could make the argument that you could get hyperinflation because the dollar, wouldn't be worth as much. You need more dollars to buy things. It gets kind of complicated, and that's because we have never defaulted before. But that's going to be the biggest concern for the markets, really from now until June 1st, specifically. That week of May 26th is when JP Morgan's going to start meeting 3 times a day. That's where it's going to get a little bit more down to the wire. And it might be on like June 1st that you actually get a deal. So the closer we get to that, going to be pretty bad. Now, JP Morgan does say that you could expect issues with contracts, collateral, and clearinghouses. Maybe the clearinghouses would shut down. You thought disabling the buy button was bad. Well, what if there just is no trading that is happening, or very limited trading on the markets because these clearinghouses just shut down, right? I think that would very negatively affect shorts in short positions, because inherently, last time something like that happened, AMC stock as well as other stocks were a lot higher in value. Now, you can get pretty complex into what a clearinghouse shutting down could do for the markets, but I really think collateral would be the biggest story there. I think if stocks fell by that much, I think Jamie Dimon from JP Morgan is saying, hey, there's a lot of stocks that are used as collateral to fund things, to fund loans, to fund, short positions, to fund a house purchase, or a lot of other things that are held in collateral, right, for these said loans. If you all of a sudden got stocks that lost that much value that quickly, we're talking 30 to 50% if you actually defaulted, well, you would have a major collateral crisis. Now, you don't even have to see a default necessarily. It just has to get close to a default for the markets to really start to kind of spaz out, and that probability of a default would get a lot higher, and firms would have to hedge. That's the simple fact here. They would have to hedge, and that hedging for downside would push the markets down. Now, this next week, you're probably going to get more of that eking into the markets every single day. And keep in mind, Volkswagen and some of the best short squeezes we've ever seen happened at the lows of crashes, right? Because that collateral does start to dry up. Now, if we go ahead and take a look at some of the institutional filings coming out, we're seeing a couple interesting ones, and you guys can look this up for yourself. It just Fintel AMC and go to institutional investors. One that I want to see is JP Morgan. They actually just bought a call position worth 150,000 shares. Now, Citigroup, they just increased their put position by 67%, bringing that total put position to control almost 38 million shares of AMC. Now, when I really sit back and think about this, Citi could be a big supplier of shares to Shore. And why this is telling me this major put position, this huge put position, is because if Citi was lending out stock, right, and they lent it out to a hedge fund, well, if the hedge fund gets burned on that, well, Citi's going to get their shares back at a higher price anyways. Why would Citi care? Now, if they lent out all of this stock and AMC stock actually went down, they need protection to the downside, because maybe not some nefarious activities that they are doing with these hedge funds. They have to cover their risk in case hedge funds are right? And that's where things get interesting, because they also have a call position worth about 12.5 million shares. So maybe they're hedging for both sides here, but this is by far the largest calls or put positions that you will see on these filings. Like, they are the top dog with puts or calls as far as their total position size. You could scroll as long as I did, like basically through this whole thing, and you're not going to find anything similar to that. JP Morgan has 150,000 share call position. Even Vanguard, like the main Vanguard fund, has what is that? Oh, that's shares. That's 16,000 shares. Yeah, like, you're not seeing anything in that kind of scale or even in that neighborhood, not even close. Citadel, they have a call position of 11.5 million shares, about the size of Citi, but Citi's put position is 3 times that size. You're just really not seeing anything like it. You got a almost 5 million share put position right there, a 3 million put position right there. Those are the other highest ones that I see. Like, there's literally none that are to that scale. 30 million plus shares just doesn't happen. Now, Co2 Management, that's a pretty good one. They now own 3 million shares of AMC. They increased their position by 303% recently. And there's a lot of bullish ones. I'm just looking at kind of the ones that stand out. Intera Capital, look at that. February 13th. Wow. Look at that. February 13th was the filing date of this. And they had a brand new purchase, 21 million share put position. Oh, look at that. Isn't that going to be perfect timing? Let's go ahead and go to the charts real quick. Look at that. Yeah, look at that. They started shorting it so much after that news came out. Or when that news came out. So yeah, some nefarious activities it looks like is happening with some of these filings. I really can't put my mind around why Citi specifically has such a large put position as well as a call position, but more importantly, why that was increased 67%. That means their prior short position was what? 13 million shares? That's more reasonable. Now it's over 30 million. Let me know what you guys think about this down below in the comment section. Why their position is literally that massive. Just Citi alone, theoretically, in the options market, if they were to exercise all of their options, would be a 10% owner of AMC stock. That's a lot of options. To put that into perspective, Citi would own 10% of AMC if they exercised all of those options. And those are options that eventually go to zero. Most of the time. About 87% of the time, options go to zero. Now, let's go ahead and talk about the overview of what is happening right now with AMC stock. $684 million worth of short positions in AMC, 24.8% short interest of free float. Free float out on loan, 32%. Shares out on loan, 165 million. Days to cover at about 5. Cost to borrow over the last 3 months, sitting at 178%. And you have 100% share utilization. So most certainly here, these numbers are very, very high. Now, the cost to borrow fees on a daily basis as well just won't let up, and you got to be irritated if you're a hedge fund at this point. Cost of borrow average 206%, cost of borrow max 356%, cost of borrow minimum at 135%. They just really cannot get a break. But the biggest story as of recently is the artificial shorting pressure, guys. You think AMC's falling because shorts are shorting the stock? Yes, but no. They're not shorting shares. They're shorting, or they're buying these deep in the money puts that makes market makers go out and short AMC. Like, Come on, how obvious is it? If you guys watch the videos from yesterday, then you'll see all of the orders that we went over. But even today, $500,000 $10 put, $600,000 $10 put, a $4.6 million July 21st $10 put. Give me a break. It's so far in the money, it forces market makers to almost instantly go out and hedge these trades. Because if they don't, market makers are going to get blown up. It's programmed into their algorithm. Once they receive this many, options being bought, they go out and they hedge. They go out and short stock if it's calls, if it's puts, and they go out and buy calls or buy stock if people are buying calls, because they have to, right? Because if AMC, these are $10 puts, so the example's a little bit weird, but let's just call it $4 per share. If essentially hedge funds bought puts at, just call it $5 per share. If they bought puts at $5 per share, well, what that means is hedge funds have a right to buy AMC stock or sell AMC stock, at $5 per share. That means the market makers have to go out and short AMC before $5 per share. Maybe it's $5, 1 cent per share. They have to go out and short AMC, factoring in the break even that they got for these hedge funds placing this trade. They have to go out and short the stock pretty close to that strike of these options being purchased, right? $5 per share. Hedge funds are going to have to go out shortly after that option is purchased and go out and short 100 shares of AMC for every one contract. So if you look at this one trade today for $4.6 million, times that, there's 7,500 contracts, times 100, 750,000 shares that had to be just shorted here today for that one contract. When you consider that's 10% of the volume today, when the volume is only 7.5 million, and market makers for that one trade had to go out and short 750,000 shares, it's not hard to see why AMC's falling. Come on now. It has nothing to do with anything else. That has nothing to do with the courts, has nothing to do with this market, has nothing to do with anything. You just see these kind of options with AMC because shorts, they're getting greedy, or it's part of their hedging strategy. One or the other. You guys take your pick. Now, that is going to do it for this video. We have a lot more to talk about, guys. It seems like there is a lot happening today, and there's going to be a lot happening. So stay tuned for that video coming out roughly at about 4 p.m. today. In the meantime, hit that like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. If you guys also want to come trade with me live in real time, link down below in the description of this video as well. Most importantly, enjoy the rest of your day, and I will see you in the next one.